Tree, and this is what I did because remember, this was a rinse and repeat for me. So I already had my target set and I had another runner already running. So I did take profits on Dollar Tree today on this run. I had to. I'm part of this. I was part of this rejection wick right here. I'm part of this. So I saw the run, I took it. Now, my reasoning for that was I didn't know the tariff ruling. I did look at the poly markets, and the poly markets were saying that it was against Trump 75% and for those tariffs at 25%. So even with that, I still didn't trust it. And if the tariffs would have stayed in place, this could have hurt this company. So I 140 was my target. I got so damn close to the area that I was already up 80% over. It was like 84%. So I said sayonara now. For another, if we can hold this area here, that'll be nice. But it needs to hold. But right now I am out to play and now I am again on the sidelines on this play watching it. So we're gonna watch it. I even have see right now we're in that range that we need to hold. Those dotted lines, those are alerts that I set. I want to see which way it wants to break from here. So we're gonna watch Dollar Tree, but for now, it's neutral. I'm out to play. Now let's go to Home Depot actually, because Home Depot I'm still holding. And so in Home Depot, we did the weekly last week. So look how the weekly played out. It went from that chop straight down to the downside. But look where it held. And Ab's a monster because I'm just gonna recall that he did call 378. He said it was coming down here. He's a monster for that. And look how it's holding. It's holding. So now we're gonna see what the weekly this weekend says for Home Depot. And this is creating structure right now. Look where it's bouncing. This is creating structure right now. So we still have upside here. I'm still holding this play. I haven't went nowhere. I'm still here. So with Home Depot, right now, we bounce off that 378, we golden. We golden. It hit the extended edge to the downside, and look at the way it rejected right there. It don't get no better. That don't get no better. Now, we don't want to see a little speed up into the selling to the end of the day, but 2 hours, 3 hours from now, not much is gonna happen. So we looking real good at Home Depot still. Now TPL, let's go to the. So with this play here, look at this. So
That thing
I
going
reversed.
crazy.
It is. You notice I reversed the magnet because I wanted to come back down now. So, so show me some structure. So show me some structure. But okay. So now with TPL, this is beautiful. I exited my play yesterday. I was already up damn near 400%. I follow my rules to the T. 470 was the target. I hit 470. Volume was still strong yesterday. I let it rock. Beyond, I left in the 480s. The thing is at 515, 516 right now. Don't matter to me. I follow my rules. I do not negotiate with my exits. I do not negotiate with my profits. I do not negotiate with the market. Once I have a rule, I follow it to the T. Now, with TPL, this thing, I heard the whole entire call. It was an amazing call. These people have literally zero debt in their balance sheets. Zero debt. And they're expanding on their land with Google. They're opening data centers for Google. That's massive. So now what I want it to do here is reject right right under this red box you see right there. Those are my high volume candles. So if we see where that's coming from right here, right from its all-time high. And mind you, TPL did a split. So this all-time high at once upon a time was over $1,000. They did a split for I think 3 for 1 or something like that. So now you get these price ranges. So now The top of the range here, the all-time high is going to be around $600. Let me see the exact dollars. 590. So right below 600. So what I want to see is, again, structure. What I want to see is we can come and bounce in this area. That'll be nice. There's thin structure all over here. So we need to collect some of this. Chances are TPL can very well, guys, bust through this and get inside this range. There is a high probable chance of this because the company is so strong. Now with TPL, this is now, we have to be patient. That's it. We have to be patient. This thing has been running like a truck. So I had to manage my risk and cash out. So now we're just going to wait for a nice retrace and we're going to catch another entry on this thing eventually. But patience will pay with TPL going forward. That is the recap for the live plays that I had. And I wanted you guys to know what I did. And I didn't want you guys to think that I'm still in TPL cooking and all this. Like, no, I want to be clear with you guys so you guys are not chasing after the play just because you see it still running. This is danger zone. I don't care how good the play was, the call was. I don't care none of that. This thing has been running nonstop. Look, it's another 5% today. This thing has been running in 5% increments for the last 2 weeks. While I loved it, while I was in the play, it's still not healthy for a run, a massive run like this. Look, it even blew off the top of my flag target. Just blew it off. So now some nice structure to here, we can talk. Some nice structure to here, we can start to get aware. It doesn't mean the first pullback and we jump. It means we're going to watch it. This was a very strong, massive move. So now we're going to watch it. Let me see something. Let me go to the daily. Let me go to the weekly. Compress this a little bit here. And let me get this stuff out of here. Then again. All right. So look at this. Look at this. Look at this. Look at these candles. That's beautiful volume. But at the same time, this is leaving fair value gaps. It's leaving imbalances in price. It's leaving the imbalances in these auctions. So what does that mean? It means we will get a retrace at some point or another. Where could it be? We're at no better spot for a retrace now. We're at no better spot. Now, if I do this, just for data purposes, I want to look what happened in this candle that popped over my big volume here, right? So what happened here? Right here, we have massive buyers stepping into the tape. But what happened? It left imbalances here. It left imbalances, which means they have to square these imbalances away. At some point, there is imbalances here as well. Look at this. This is even clearer. You guys understand this better. Look at this candle here. So let me get out the brush. Look at this here. See the zero? Oh, damn. It's hard to write on the weekly. And the weekly, the brush writes stupid. Hold on. Let me get a different tool. I'm going to just get the trend line tool. Look. This zero to this number. So this is how I'm going to have to do. Oh, you know what? I got it. This is this right here. Look. All right. You see the buy side right there. 69,000, right? Look at the sell side right here. That pertains to this side right here. It's on zero. That's how you read them. You read them going across, now parallel. So this is how you know it made an imbalance, because that zero, according to that 69,000 in buyers, left 3 times the size. It's a 300% increase. So that forms an imbalance here. So did it do it here? So did it do it here? So if you get a retrace on the next candle down to this area, you could get a pop. You can see a pop, or you can see a failure here because we have the imbalances here that we need to come and fill as well. And that's going to give us structure so we can have a healthy run up continuation. But until I see some of this stuff start to get filled, I'm not going to feel comfortable. There's a lot of power behind these moves. This was straight an institutional run. Notice how this run has been so massive. The news. That's how you know when they're trying to hide the move. And when they're trying to sell it to you, it makes it to the news. You guys start buying it, and they start selling it nice and quietly. So that's the rundown on TPL. TPL is still massively bullish, but risk control. I had to do what I had to do as an investor. So I collected. Now patience is key here. Now let's look at a little overview of what happened around this week with the markets and with the news that came out today.
Wait,
Because what's up, Ab?
we gotta
Talk to
hit.
me.
We gotta go over XLE,
Facts.
and I gotta pull up. I yesterday I seen a lot of others because we're gonna stay on one thing and then we'll move to the next one. So I'm about to
Facts.
let me see. I'm about to share my screen, bro.
Go ahead. You
Take
got
it.
it.
Then you take it back, and then yeah, because I want to stay right here. We're gonna review. You just did the you did Home Depot. You did TPL.
TPL and DLTR. Dollar Tree.
XLE. So XLE, XLE. So XLE, the entry was like $54 and like 15 cent, but it was just a starter position. I'm expecting to pull back. We're pulling back now. Why ain't this coming over? What's going on? Why ain't this? What am I doing wrong?
Sometimes it gets stuck and you can't move it. I usually just redraw it if you can't adjust it with the settings.
Okay, that's some bullshit.
Bro, trading views acting up. It was just happening to me too, man.
All right, uh-huh. Hi, Lakia. Peace, Queen. Peace, Slovene. Bro, this shit's really. I can't remove my trend line. What is going on, bro? All right, so this line that I'm trying to put that trading view won't let me. All right, boom, got it. So this line right here is the line that I want to see XLE eventually hold. Right now, it's just gonna let me drag it over, bro. All right, so look at my dotted lines. Um, right now we're pulling back. We had a nice bounce off of this structure right here. Candles bounce off candles. All we're doing is bouncing
Really?
off
Yeah.
the candle.
Oh, wow. Okay. Yeah.
Candles bounce off candles. All we're doing is bouncing off of this candle over here. Um, and even if we come down here, I still don't mind it. my stops is at $51.50, so I'm not really worried about it pulling back at all. $51.40, my apologies. Um, and then I could just look and I see on the daily, my 20 is all the way down here, but it's still at $52.44. So my stops still have a comfortable dollar cushion. So I'm not worried about that at all. My moving averages is acting as support right now. I got my 20. This is wrong. Chart all messed up. My 100. There's no way. So what is this blue one? Ever My shit's fucked up from the last Zoom. Stuff a lot. Cursing on it. So that blue one, yellow, green. What is that blue one? Is that the VWAP? I don't even know what this blue one is. Oh, okay, okay, okay. All right, so I'm gonna remove this. That's what it was. All right, so I'm fixing my 5 day. All right, so my 5 day is acting as support right here, and then I have my 10 that's right underneath my five. So right now it looks good. It's just pulling back. Um, and that's filling the gap. It just filled the gap up from yesterday. Um, I'm comfortable with it even coming down here and filling this gap. 5 days holding right now, so it looks good. We're back in our buying channel. Is We're just chilling. It looks good. No worries on XLE. And then yesterday when I had got up, I checked my phone. I seen energy was going crazy. Where is it? My watch list was TPL was up like 11%. And then we had I seen what your post, I mean your comment forever after money. You asked about you. So Devin, BKR, OIH, all of them look good. Just a quick glance of them. I'm not gonna get fully into them. Um, so Devin came back down. It's coming back down to this base. It's not ready. Energy isn't going to just take off just yet, but Trump is making it volatile, so it could be taking off. But right now, it's just holding the base. It hit all-time highs yesterday. Um, we're getting a retracement on most of them. OIH hit all-time highs yesterday. It looks good. Pull back. It's holding sturdy. Then what else was it? BKR looked. I think BKR was like the best one. BKR's holding right now. Looks steady. So we're just consolidating. We're holding the base. Everything looks strong right now. As long as it's holding, it's strong. And then one more thing was all right. You asked about. Where's your comment? What was you asking about you?
I think it says it looks like an entry.
If it was like
Um,
if a possible good entry for like a swing.
Okay,
Last time I checked, it was around like 20 or 21.
gotcha. You isn't ready yet. It's lost to five, lost to 10. It didn't close yet, but it's rejected my 20-day moving average. That's not a good thing to see on the daily. So it could be coming back down to $19.73. And I go to my weekly. It already came down there to $20. So right now, UUU isn't ready yet, but it once it closed above $21, No, $22.50. It has to close above that and then hold. Um, then it'll look good. Right now, it's just energy is just going to consolidate. You're going to see energy just hold. Like while if the stock market pull back, energy is going to pull back slightly, but it's going to hold though. But we have a nice head and show, a nice cup and handle. It's not validated yet.
Got you. Appreciate it.
All right, you're welcome. So yeah, we're just waiting. It's just a waiting game. Um, and that's all
Sorry,
I want to run through. Sorry, was that
it's Levine. So what validates the cup?
losing this 100-day moving average? There's eighteen
So it
dollars and
has to
fifty cents.
so it has to fall below it and then sweep back up?
If it closed below it, then it invalidates it.
Okay.
So if we close under $18.50.
So
Really,
that invalidates it. What validates it?
what validates? Oh, that's what she said the whole time. My apologies. So once it breaks up here, so our $26.80 will validate. It will confirm that this cup and handle is ready, and then once that happens, the target is going to be really big because that's a huge cup and handle. 35 $34 and I say 80 cents. Once it breaks $26.80, $34 and 80 cents. And this is a shorter. I mean, this is a cheap stock, so that's still a nice move right there. $8 move. And yeah, it depends where you put your stops at. But yeah, I like everything so far. Our watch list still looks good. Um and yeah, go that's it, Rams. I just wanted to go over the review of that. Trump is going crazy. The Supreme Court made my ability to impose tariffs more powerful. The decision crystallized my tariff abilities. Sound like a wizard
Even though they voted 6-3 against it?
because he got something. We're gonna get into that. He got something that he's cooking up. All good, all good. So Rams, you wanted to go into affordable for me. I like it. No, it's a fact. For leaps or swings, when it is validated. Either
Sweet.
or. Really swings though.
Okay.
Um, so Rams, where were you going again?
Well, I was actually about to start getting into that whole tariff ruling with Trump, and possibly what kind of market are we getting or heading ourselves into?
Got you. Yeah, yeah. Because yeah, we did stocks watch list. Oh, we did the stocks, we did the watch list. We didn't do the indices, we didn't do the commodities, and we didn't do Bitcoin yet.
Right.
So you could take it because I've seen you going to NQ, I think, or ES.
Yeah, I was gonna go see what NQ was doing today, and we was gonna go see what ES. And those two usually move pretty much alike. So,
Go ahead, bro. You should be able to share it.
but all right.
And then after you do that, then I'll give my take on it, and then we'll go
Okay,
down.
so you. Okay, yeah. Look at this. All right. So you see, technology sector here is dangerous. This is dangerous here. Now it is holding this zone right here, this whole range right here. Look, right into the supply area. And what did it do? Right into the supply area. What did it do? It just rejected and sold off massively. Because look at the volume. That sold off massively. So this here, I will be very careful trading technology stocks. Don't go chasing around them. Wait for really good setup for a technology stock. See what it does. If it could be a part of the Mag 7, maybe be easy on the Mag 7 because they've been running so hot for so long. Oh, you're gonna get these stumbles here and there, and they are the tech leaders. So now This right here looks very, very hot. Look at this. Look at this here. And what side of the range are we favoring? We're in the bottom side of the range. Look at the structure. Look at the structure. We're maintaining this low. We're maintaining this low here. This is our lower low here. So as long as we don't lose this here, you're fine. But regardless of which, you're at the supply zone. You're at all-time high levels. Even though all-time high could be another $1,000 up, doesn't matter. You're in the all-time high area. It's very, very possible. We can come visit this. We can come visit 244 right here, 23,000. It is very possible. It is very possible to come right here. 22,344. I'm not saying it's going to happen, but what I'm trying to let you guys know is this is danger zone. Right now, with all the CapEx spending, you don't have to worry about profits. And these guys, they're investing. This is their moment to invest. They have to invest in order to keep growing in the future. Right now is their time to invest. So we can leave them alone for now. And there's other opportunities out there for us. Like if we check, let's look at the small cap. Now look at this. Now, this is a different scenario. Why? Why, R.A.M.S? Why? Because we have a bullish flag pattern here, for one. For two, we haven't been lingering at this supply area. Small cap hasn't been running. We just broke this structure right here. We retested it, held, and now we're on the move. We're creating bullish structure in the small cap sector. The whole thing with the tariff stuff that happened today, that is very bullish for small cap. So let's see where this goes and where it leads us. But this bull flag pattern here sticks out like a sore thumb. It broke. It broke here. It broke here. Now you're at a massive supply again. So you're going to have rejection and fear happening in any instrument that you see. You're going to see the same psychological reaction. Even on the bottom side, on the other way, when it starts to turn around, you're going to start seeing the same reaction. So right now, we're standing here. This is bullish. This is not a consolidation all-time high pattern where you can see a distribution phase can possibly begin from institutions. This is money pouring in right now. Look at the volume alone. That's just money pouring in right now, getting ready, because small cap hasn't been running. They haven't had their turn yet. So I'm really liking the small cap sector. I have a little list that I've been adding to, just watching. Not that I'm jumping on any plays right now. I'm just watching. I am very patient when it comes to jumping into plays. Ab said it the other day this week in the last class when he was live. You don't need to be in 10 plays at once. 4 plays is too many sometimes. 4 plays can have you over leveraged sometimes. Sometimes I'm in 3 plays. And I manage my plays all the way through before I start looking at a new entry for something else, a whole different instrument. I'm not looking all day long, where is there an entry for anything, anywhere. I like high probability setups only, and only setups that I feel comfortable with. You could tell me, yo, R.A.M.S, this broke. If I look at the chart and I don't feel comfortable with it, I won't take the trade. You don't need to take every trade, especially if it doesn't follow your rules, your guidelines, or your strategy. So this to me looks primed. This is primed for a run. Small cap will have their turn. So I'm watching it very close. I'm watching all this stuff with the ruling, with the tariffs, with the possible conflict that we might have, because now who knows what this guy might want to do. He might want to feel like he wants to get somebody back for this. I don't know what card they're gonna blow out of their hat about the tariff stuff, but he might be feeling some type of way and add to the conflict with the Middle East. So let's see where all this fear mongering ends up. Ab, you want to add anything?
Yeah. So let me just what we doing? You might as well just finish. I know you probably not gonna touch Bitcoin, but gold and silver.
Bet,
And then I'll give my indices gold, silver, and Bitcoin, and then check your messages after.
bet.
Alex was saying I was putting a small cap list together, some, not a bunch of volume or OI for contracts, and then not jumping on trades, though. Been missing some run without me.
All right, so gold. So you might have a little chance with gold to run. It can have a little pop, especially with all this stuff that's going on right now. People are definitely hedging over the weekend. Now, the volume for a daily candle is very low. Yes, we're just getting at average is very low. So the move is still not as strong as you think. This could be a fake break off this symmetrical triangle pattern. It could very well be a fake break. Now, the candle itself hasn't even broke these highs yet. So I would be careful with the run pop. Yes, it can as a hedge. I still don't like gold here. I don't like it at all. This is, to me, this is creating, you got your higher high, you got a lower high. Now we're going down. It's creating structure to the downside. It's changing the trend. So I still don't like gold. Can you make a little something out of it? Sure, you can, especially with the Middle East tension. I don't like it. I don't like it at all. Let me look at the 4 hour 1 second. The 4 hour looks steamy and still weak at the same time. See, it's breaking off your symmetrical triangle here. I still wouldn't trust this. I still wouldn't trust it. And let me look at the monthly one time. Let me see what yeah. I've been engaging myself with the month anyway, and look at the candle and look at the rejection here. We're nowhere close. We're
Mhm.
nowhere close. Nowhere close. Look at the volume difference. And what's the date? What's the date now? We're
The
on February
20th.
20, and it has 8 more days left. So more than half of the month already passed. This is more than half of the monthly candle. Look at the volume. Do you
Mhm.
trust this run when you look at it? That's the question you have to ask yourself. Look at the RSI. Look at the RSI here. Where is this thing? What is this number? 94 still? Come on. That's not good. That's really not good. This is right here. This is what is going to become, guys, is trap buyer territory.
Mhm.
This is what this is going to become. If you guys
Mhm.
are not careful, please be careful with this. If you want to use it and you want to go ahead and day trade it, and okay, but long term, you stay in this for a swing, you overstay your welcome with this gold, you're gonna get smoked. You're gonna get smoked. This doesn't even look good. Like the entries were here. We're here on the break. We're here. Structure. They just took off. It never came back to retest nothing. We don't even have a retest anywhere. I wouldn't trust it. Runs like this are unsustainable. You should never trust a run like this until we pull back. We need to pull back. We need to create structure, create a new floor, make sure it holds. Now we take our entry.
Mhm.
So that's gold. Let's go to silver. Same story. Same story. Now for the monthly candle here, and you're only gonna see the volume like this because of the candle. The candle is indecision. So there's volume, and that's why you see the volume a little higher than in gold here, and it's only green because the candle favors the bulls. That's all it is. But it's still indecision. This is no good. Look at the candle here. That's the hourly candle right now, the last candle right here, and look at this reject. That's nasty, guys. If that is so nasty. Look at the volume on the rejection candle. That's ultra high volume being rejected on that price. Again, be careful with silver as well. You can have yourself a little pop right now, hedging, Middle East tensions. Just be very, very nimble here as well. That's what I got for those two metals.
Word.
Don't like them still.
I agree. Peace, Sonny. Peace, T. Well. You gotta put your real name, so because I'm gonna call you. I know that's not your name. Peace, Jacoby. Peace, Chandra. Peace, Gina. Peace, Pat. Peace, Richard. Peace, Nisi. Peace, Lakia. Peace, KT. Peace, Alex. Peace, RJ. Peace, Levine. Peace, forever after money. Yep, we're gonna go over that too. Trump announces new 10% global tariff. He acting up right now, y'all. I'm looking at while R.A.M.S was going, I kept getting alerts. Trump on tariff refunds, Trump approval rate may hit. He's talking right now, so he's like really going. He's upset, you could tell, because he's really doubling down on tariffs now. On auto tariffs, he's talking about 10% auto. He's really being childish right now. 15 and 30. But we're about to get into that, but I'm about to first go over what R.A.M.S just go over.
Yeah, you ain't lying. Trump tripping right now. I'm watching
Yeah.
him.
Are you listening to them?
Yeah, I'm listening right now. Trump tripping.
What network you on?
Yeah, well,
I'm on CNBC. He live on CNBC and on the White House page.
yeah, I'm gonna pull up his. I don't really want to hear him, but I'm gonna pull up to see everything he's talking about that's important. So ES, there you go. There you go. So ES, let's see. Okay, then I go to my 4 hour. We're still in this nasty range. I don't see nothing that I like on ES right now. Um, Lower highs. We got a lower high potentially. We're making lower highs and lower lows. Um, Now we're starting to chop. We're in the range right now, so it's not much to say. So this week, I did say that we'll drop a little bit and then consolidate. And that's what we're seeing right now. Um, so next week, based off of the candles, I believe we reject to end the day. Today, what's today? Friday, right? We'll reject. If not, we're gonna stay close to where we're at now. We'll probably hit today highs, but honestly, I see as if we do come back up here, 6,922, we're gonna reject. I think we reject, and then next week we reject, fall lower, and stay ranging. I don't think much happens next week. I do think we drop though, but I think we pop back up a little bit and then range some more. Uh ES don't look good. It's just ranging. But if I'm looking for a drop, I need to look at NQ. So NQ is telling me because tech is heavy, tech is fragile. So we look at tech when we looking for the market to pull back. So now we're getting closer to the bottom of our range, right at the AV WAP. That's holding us. We're below the 20, below the 10. Same things, just choppy. Choppy price action will probably drop and then consolidate. I don't see us really doing too much yet. It's just choppy price action right now. And that's what happens when the Feds is split. Same thing with the Russell. Choppy. We'll probably come up here and then reject and then come back down. So I see choppiness. So I do want to tell y'all, everybody, so we have to think how everybody else is going to think. So if you're not really digging deep into how to trade, like the sector rotation and all of that, if you don't really like understand it, truly understand it, what most people are going to do, they're going when they think like, oh, when they hear war talks and all that stuff, they're going to automatically think of gold and silver. Ab is here
Hmm.
to tell you that gold and silver is not going to run how it just did run. I'm gonna get more into that when we talk about the Feds, but if you're jumping in gold and silver, I'm going to pray for you because you're gonna get smoked. Um, so what I see for gold, I see a bull trap. I see us possibly coming to 482, but not that I don't honestly I don't if it was to run 482 would be, let me just put it like that. If it was to run, it'd be 482.
Ab, how you feel about doing puts on it?
Not yet. It has to break 459 or 458. Yeah, 458 is real close.
Okay.
Um, so I think it comes up here and it grabs liquidity. This right here, I'm gonna get into. When you see a wick right there, that this is a warning right here. You shouldn't be getting in this play at all. It's nothing on gold tells me that it's bullish at all. So if you're getting in this, it's only because you're thinking defense. But now you have to understand it's 2026. It's not 2025 now. The money is rotating. It's not going to jump into gold and silver like how it was and then take off. Gold and silver is going to go back to what it was. It's not going to be running like how Bitcoin runs and stuff like that. Um, so gold, my highest target will be 482, but I still, yeah, I'll just say 482 for gold because it can happen, but it's going to be a bull trap though. It's definitely going to reject. That's the highest I see for gold. I don't like gold. Oh, and then silver. What time is it? 154. Silver is worse than gold. Silver is going to make the move to the downside before gold. Silver is going to go to $79.55 and then it's going to reject. It's probably going to consolidate there and then reject and it's going to go lower. So let me go back. When gold loses 458 because it will, when it loses 458, gold is going to go. This is an ugly chart. When it loses 458, gold is going to 435. So silver, when it goes to $79.55 and reject, it's going to come down to $60. That's just it for now for silver. Potential head and shoulders on silver. Left shoulder would be over here, head would be right here, and then we got our shoulder right here. Right shoulder. I'm gonna get more into why I don't like it though, but this is the last thing, and then Rams, you seen what I said to you? So the market follows Bitcoin. Bitcoin is setting up a bear flag and is getting ready for its next leg down. It's not ready yet. It's consolidating and it's going to continue to consolidate for now, and that's another reason why the market can consolidate some more. It got a little more room to the upside. If you see Bitcoin taking off, is only
I
going
got
to
you, Em.
seven. Okay. If you see Bitcoin taking off, is only going to 70K. There's no coincidence that my 20 is right here at my resistance. So if Bitcoin do start ripping, ignore it. It's going to 70K and it's going to reject. And then I have $62. I mean 62, 62. Yeah, we say 62K that I really wanted to take out. And then back to 58K. 58K is where we bounced off of. That's around the 200, and my support was right there. But now the 200 is flat. Now sellers could overthrow that now for sure. The 200 is flat now. It could take it out now, but it's going to consolidate more, so this could get even more flat, and then sellers is going to take that out for sure. Um, I'm bearish on the market. Nothing changed. I've been bearish on the market. We hit all-time highs, but we were close, and you see how long it took to hit that 700. I'm still bearish on the market. It didn't even it's nowhere close to what it's about to do yet. Um, and you're gonna start seeing your safe havens and stuff. They're not gonna be your safe havens. Uh, you're gonna see a lot of people complaining about gold and silver for sure. That's all I got for that. The indices commodities. We did the watch list basically. We didn't hit everything, but the last Zoom I updated the watch list, so if you missed that, you could go look at the last Zoom. Um, and then go ahead, Rams. That's all I got for this part.
Bet. You want to jump on to the next thing?
You want me to, or you want?
You go ahead and then I'll go out too.
Okay, so we're going to talk about the Feds. Um, so right now, we're just real quick. Let's just get updated real quick. We're just gonna run through this. I got like an hour and a half, so I can't spend too much time. Time really go by fast, but we're just gonna get an update to see what Trump is talking about. Uh, U.S. trade.
Real quick,
I don't have to.
where can we review the Zooms?
They're
Where can
always
we
gonna
review?
be on my YouTube channel.
Okay, thank you. Sorry.
So no, you're fine. So if it's a Zoom, it'll be in the videos. If
Okay,
it's a live from YouTube, you just go to live.
okay.
Um, all right, boom. So, real quick though, I do want to. I If you don't check my post, check my post. I've been adding new stuff in there. Um, check out R.A.M.S website. I posted it right here. It's one of the tools that you can find if you need to look at your flows, your maps, or you just want extra information. Got watch lists on there. He even got support and resistance on there. It's dope. Go to the post. The link is pinned in the comments. And then I'm going to be adding Jason is going to be to he's going to be giving us his spiritual juice because it's refreshing. We need it. Even if you don't think you need it, you need it. So but that'll be Wednesdays. These Zooms is going to be strictly market action. But on Wednesdays, we talk about God, markets, discipline, truth, and the reflection with Jason, ownership, legacy, and freedom. I love talking about stuff like that. So that's all I got for that. So then now we talk about Trump. I don't have to work with Congress on tariffs. Trump 10% tariff is effective, I think 3 days from now. My son do not care about no Supreme.
Uh,
He
He's
said he
crazy.
signed that note today.
Huh?
He said he's signing that joint today.
Yeah, he's crazy.
Like, into the business.
And he didn't wait a day. He hitting them an hour later.
Oh, right
The
off.
10%
Yeah.
tariff is effective, I think, 3 days from now. 10% global tariffs for a period of about 5 months. 10% tariff straight across the board. Trump on tariff refunds will be in court for the next 5 years. Trump asked if the U.S. had to return tariff revenue. I guess it has to be litigated for 2 years. Trump asked about tariff refund. The court didn't discuss that. The U.S. will get much stronger after this decision. Now we have certainty because this ruling is out. Taiwan touts Taiwan chip companies manufacturing in the U.S. Stay away from tech and semiconductors. Trump, I saved Intel. Wouldn't be Trump if he ain't be cocky. Trump threatens 15 to 30% auto tariffs. Trump on results from tariffs. We will keep it going the same way. He do not care what they talking about. He's still gonna do illegal tariffs. That's really like that's really truly crazy if you think about it. That's a Supreme Court ruling. Um, there's no need to ask Congress for additional action. He's moving like a dictator. He's not caring what Congress or anybody has to say. Several investigations are to be initiated. He's about to really cause havoc. I knew he was gonna do this too. All right, so yeah, that's it about Trump. So now Fed minutes, just a recap of what happened on what's today, Friday. So what happened on Thursday? The Fed minutes from earlier this week made one thing clear. They're in no rush to cut. They're holding rates when they are. They're holding rates where they are. And they still don't fully trust that inflation is under control. Even though prices have come down, they said progress has been uneven and slower than they want. So they are not ready to ease yet. Some members are open to cuts later if the data keeps improving, but others are still worried inflation could stick and even said hikes can't be ruled out if things heat back up again. That tells you that this is still a higher for a longer environment. The Fed is watching inflation, jobs, and financial conditions closely. And every move is going to be data driven. No pivot, no easy money, just patience and caution. That's why this market is going to stay choppy and headline driven. So that's another reason why I believe we're going to consolidate in range because policy is still tight and uncertainty is still in the system. This is a structured market, not a hype market. It's not a growth market, it's a value market now. 2026 is way different than 2025. You're about to see that. That's all I got as far for the Feds though. Yes.
What's the difference? Other than
Uh,
we know that like technology and stuff is slowing down, what's the difference between the two types of markets?
so when you see tech leading and stuff, that's a you call it as a bid market. So that's a buy the dip. Every time you dip, you just see buyers come in and buy, and we'll just keep ripping up, ripping up. Now, so that was growth stocks, not even just
Mhm.
tech. But that's when you see us really moving. You'll see us go from 600 to 700 on SPY, like what we did fast. Those are growth stocks. So
Mhm.
now we're going to get into more dividend stocks, slower pace stocks. Now, your financials, like your balance sheet and all of that matters. Last year it didn't. Now this year that's
Mhm.
going to matter. Now it's not buy the dip. Now it's going to be your break and retest. Now you got to see who's truly in control. Do you know about structure? If you before you didn't have to know, you just know it's going up. If it goes down, just know it's going up. Now, if it's going up, you have a more likely risk of sellers selling off that run. Now it's not buy the dip, it's sell the
Mhm.
rip. That's the two difference
Mhm.
between the two. Now we're in neutral to sellers territory. We're not in buyers territory no more. For now, we're in neutral territory. Slight edge to the sellers. Eventually, we're going to be in complete sellers territory. that's the difference from this year to last year. Last year was it still was kind of difficult to trade. This year will be very hard to trade. You're going to see that very, very hard to trade. You're going to see it go up for 2, 3 weeks, and then 1, 2 days take away those gains completely. And then you'll consolidate, and then people think it's going to go up, next leg down. It's going to be crazy. Just start watching, you'll see. And I'll be updating everything in the post. Everything's recorded, so everything that I say is recorded, and we'll go back to see if I said it was right or wrong. But yeah, two different markets for sure. Now, like everything, like well, most of us, how we first got into the market, all of those things were like looking at the balance sheets and looking for dividend companies, looking for companies that have potential gains 5, 10 years from now. All those companies matter now, and those the only companies that matter. It's no more. Well, for now, it's not going to be those Palantirs, those Nvidias. You're not going to see that no more. You're going to see your smaller cap stocks going to be ripping. You're going to see your energy ripping, your oil ripping, your consumer staples ripping, your industrials ripping. You're going to see those sectors that haven't been ripping in years start to take over for now.
So is that signaling recession?
Correct.
Damn. All right, how
And
long you got?
and I'm gonna give you after R.A.M.S talks about the Fed, our next thing that we are talking about is war, oil, and yields to help y'all understand what to look for to see if it's truly a recession. I'm done, R.A.M.S.
Now, guys, you got to think too. When the feds are split and divided like this, if the Fed themselves, if they don't have conviction, neither will the market. The Fed
Fact.
being split, it really means it's all chopping the tape. You're gonna have choppy markets, like I've just mentioned, sell the rip environments in growth stocks. We're not in that environment. What the market that we are going into right now is it's practically high uncertainty. We got the split Fed. We got the tariff ruling just came out, and look, this guy just clapped back. We got the geopolitics tension. We have rotation in place. Like I've said, this year your skills will be under display. When
Mhm.
we have no clarity before the next meeting, and until we get a clear signal, you won't see a true run. Price will test both ends. There's no catalyst. Everything's just gonna rotate inside the levels. Chop, chop. It's just the way. So now you have to find these stocks that are going to benefit in this kind of market. When the court decision shifts the tone and the policy changes, and then this guy comes out and changes it right, he doesn't care. Now the markets have to adjust to this. They have to position. Money is gonna adjust the exposure. That's all it is. Now, let's say if the Fed don't cut, then now we're back into the um uncertainty area. Um more now Trump wants to add more tariffs. So now where do you go from here? What stocks benefit here? Does Meta, does Nike, does Apple, what benefits here? You have to start thinking back. Look at TPL, like I said before. They have zero debt. They owe no one in their balance sheets. I looked at it, I was mind blown. Mind blown. So that's why this run can very well continue. But these are stocks you want to look for now. Just hunt and be patient in this kind of environment. Don't trade, just to be in a play. Oh, look, I'm a little green. Oh, look, that doesn't work. It's going to work for you for a trade or two, and then you're going to see that that's not a strategy. Pay attention and follow the money. That's all it is. That's all it is. But that's really all I have on the Fed.
Mhm.
Follow the
Okay.
money.
So war and oil. And please y'all check my post. Everything that's happening in 2026, I was talking about the end of 2025. I just put a link
You were.
there that gives the summary of my view of 2026, and you're gonna see what I was saying is starting to come into play now. And I have other posts that you can read down there as well. A lot of it from 3 months ago, 2 months ago, is starting to happen now. So those posts that I make, just they really help you for real. That's all I have.
That's a fact. Now,
Um,
oil. Let's get into oil. You want me to do this? You want me to go first?
no, you go first.
I bet. So oil right now, oil's on the menu. Energy is on the menu for this year. You're gonna be on watch for energy, defense, oil. Now, oil moves everything. It's the fastest instrument to price global tension. It's gonna move on a dime. Oil's now yesterday. If you look at the monthly chart of oil, it hit a 6 month high, which people are getting ready for more tension and more tension. Now, the way I like to look at oil is just that. It's a tension gauge because almost every conflict affects energy supply every time. The markets the markets immediately react anything that can disrupt oil on impact. On impact. If there is even a chance that, let's say, barrels get delayed, they get blocked, or they get reduced, traders, they're going to price that risk into oil instantly. Right now, we got these ships on the way over there. All they got to do is be parked there. That tension is rising. The guy, I think he answered, yo, they crossed a certain line. I'm sinking those things in my ocean. Whoa. And we haven't even dropped, not even one round has been let off yet. So the tension is already here. This oil is on watch through the weekend. Now, this guy is talking about he's gonna give them 10 days or whatnot. Oil, it's it's ready to break out. It's not moving off yet. Everybody thinks that the Chevron move, all that, it already happened. No, that stuff is yet to break out. Chevron is gonna come back for a retest. But all that stuff, energy cost flow is in everything. Is in transportation, is in goods, is in services. Energy itself feeds inflation. Higher oil, higher business costs, that's inflation pressure. We got tension in the Middle East, that's oil pressure. Oil rises. Now we back to the Fed. Oh, the Fed stuck again. Now the Fed is even more undecided. The tension builds, it all comes back in full circle. Defense stocks, these stocks, they move before the headlines. Go look at they're ready. They're ready. Now defense, if oil is your tension gauge, defense is the fear hedge. So you could prepare yourself for all the moves. It's chess. This is not checkers. So if you see them positioning themselves somewhere, all right, cool. Let me go let me go see what Lockheed Martin's doing real quick. Maybe NOC, Northrop Grumman. Let me go take a look at DG. Let me go take a look at some defense stocks real quick and position myself here. Let me start looking at the oil, at the energy stocks is what we've been doing because we're ready for the rotation. We're already looking where money is starting to rotate, flip over to. But fear is premium right now, and that's gonna lift oil and defense, energy. But that's what I got for oil.
So the reason why these stocks are our watch list isn't because they're just bullish. It's because these stocks are where we see money rotating into. So if you notice, this whole list is all defense companies. I have energy on there. Well, we have energy on here. We have oil on here. We got XOM. We got CVX. We have SLB. We have a lot of oil energy. Then you got your Lowe's, your McDonald's, your Home Depots, your Dollar Tree. Those are all defensive stocks. So Alex, you can go through that watch list and you're gonna find a banger in there. Because if you just look at any of you pull up anything on our watch list, they're either pulling retracing back, but nothing crazy, or they're ripping. But oil is gonna take a hit right now with Trump, but it's not doing nothing crazy though. They're still holding that base. It looks good. But so shit, I got a lot. What should I do this? All right, so we oil one. I got a lot. I'm trying to see which one I want. All right, so I'll get into this. So before I trade, I check four things: SPY, ES, Treasury yields, the dollar, and oil. That tells me what big money is doing. The 10-year yield is the market's heartbeat, right? Doesn't look that good. If it's rising, investors expect stronger growth or inflation. My daughter just texted me. I have her. My bad. If it's rising, investors expect stronger growth or inflation. If it's falling, they're worried about slowdown or recession, right? What are we doing right now? The 2-year yield shows what the market expects from the Fed. Rising means tighter policy, falling means rate cuts and easier conditions. We fell and we fell. Now we're coming back up here and retesting this one right here, 2-year. It just the so the 2-year right now is trying to rip up. It just got above the 10-day and it just got above the 5-day. The 20-day still coming down, but now I have the 10 and the 5-day cup in my candle. So it's gonna hold as a base here. More than likely, the 2-year will continue to go up based off of this chart. So what does that mean? It expects tighter policy. Together, they tell us if money is confident or defensive. When institutions feel good, we're in risk on. Stocks trend higher. NASDAQ is strong. Yields are stable. The yields do not look stable. NASDAQ is not strong. The dollar is weak when we're in risk on. What is the dollar doing? The dollar is trying to rip up now. And money flows into growth and momentum. That's when you can lean into trades. So you got to be careful. When institutions get nervous, is risk off. Stocks sell off. That's what you've been seeing. Yields fall. That's what you've been seeing. The dollar strengthens. That's what you're starting to see. And gold catches bids. Gold's been doing it. Just don't trust it. So gold's been buying. Every time we fall, the dip gets brought. That's what it means by gold catches bids. That's risk off environment. That's capital protection. The relationship between stocks and yields confirms the tone. Stocks up, yields up is healthy growth. Stocks down, yields up is inflation and tightening fear. Stocks up, yields up is healthy growth. Stocks down, yields up is inflation, tightening fear. Stocks down and yields down is recession and panic. Stocks up and yields down equals the Fed pivot is basically the Fed pivot hopes, and each combo tells you if a move is strong or fragile. So every day I ask one question: is money attacking or defending? If stocks are strong, yields calm, dollar steady, and oil stable, that's risk on. Press momentum. If stocks are weak, yields unstable, dollar strong, oil flashing warnings, that's risk off. capital protect. What is oil doing? It's oil just broke a 8-year resistance. That is a risk off environment. That is not telling you to dump your money in the S&P 500. If nothing lines up, it's chop and we just stay patient. That's how you trade with institution. That's how you trade with the institutions, not just guessing. There's ways that we can know what they're doing. That's how you follow the money. This will be recorded and I'll break it into a video. And before we move on, let me make sure I hit everything. War oil yield. Uh and then I guess we could, what was you gonna go to next, Rams?
Nah, you hit that. You hit that on the money. I actually would like for them to write that down. That whole yield and stocks relationship, that was really good. Yields up plus stocks up, confidence in growth. And to add on that one, I would say that's more on the 10-year rising. And then yields up plus stocks down. That's inflation fear. Write these down, guys. Yields down plus stocks down. That's recession fear. Money moves defensively here. And yields down plus stocks up, that's rate cut hope. Usually the 2-year falling because Fed cut expectations are increasing. But write those down. That right there, Ab, you killed that right there.
Is there any way we can get a repeat for that real quick?
Yeah, I'm actually about to put it in the chat right now.
All right, thank you. Appreciate that.
And I got 3 of the 4 things you look for with your questions. You said ES, oil, the 10-year yield. Me and Alex missed the 4th one.
The 2-year.
Okay.
I know you're welcome. So it's gonna have to be a recording because that was a lot. So I'll drop that recording today though for sure.
That was good.
Word. Appreciate it. So what did you want to go to next? The next thing that I have really is kind of like it's with the Supreme, because we didn't really talk about the Supreme Court ruling. We touched on it like a little bit. Well, we just looked at what Trump said. I got basically stuff about that and oil at the same time in the war. So we didn't. That's what we are now. So yeah. So you could talk about it, or I could keep going. So
Well,
I'm
let me
just
add because I know I
yeah, go
added a little bit on the ruling
ahead.
today, and just to add, I mean, when big money is already leaning one way and policy shifts like this, we have to adjust. So is really we got the ruling and we got Trump fighting right back. He don't care. Right now, between the politics, our own politics in the United States, we have a choppy politics. We going back and forth. He don't care about the court. The court's talking about you can't do it. What's going on here? And now the whole global 10% global tariff. So now is that legal? Can he do this? Is this gonna cause problems down the line too? So the tariff word just lingers for another year. Now it's coming in hot again around the same month. Literally year to date. It's incredible. That is incredible. But that's what I do have on the tariff ruling.
And again, just start reading my posts. Like in the 2026 summary that I've dropped the link to in the chat, I had put that 2026 will be headline data driven. That's how the market is going to move based on politics, basically, is what's going to move us this year. So let me see. I'll try to talk slowly out, but it's kind of hard when I start going into it. Because this right here, you're gonna have to probably take notes as well. Damn, I didn't mean to make that big. So the Supreme Court ruling of the United States has officially ruled that the President Trump's tariffs are illegal on the 63 ruling. Hello? Yes. Hello.
The US now faces 150 plus billion in potential tariff refunds. That is crazy. Guarantee you that man don't pay that money back. That's a guarantee. He ain't paying. This guy is doing whatever he wants.
He's gonna be in court for 10 years.
I mean, come on. This is gonna go on after he's done being the president. So we're not nowhere near done with this story. This story is just coming back to surface. We're nowhere near. Look at his famous. That's the April. So now that I have an interesting. I saw that only amounts to 16% of the total tariffs that he's added everywhere. That board, whatever tariffs he added after that board, it's only a 16% tariff in total of tariffs that he's added. That is crazy.
That is. All right, my bad. That was the daycare calling. Their power went out. They just trying to make sure my kids don't come after school. I told them, yeah, I'm at work right now. So but y'all can hear me though, right?
Yeah.
I bet. All right, so with the Supreme Court blocking Trump's global tariffs, one of the biggest economic pressure tools was taken off the table. But now he's saying he has a backup plan. That tells you this isn't over. Trade leverage is still in play, just possibly repackaged under different authority. At the same time, we're seeing headlines about targeting Iran, regime change, and military positioning in the Middle East. That's not random timing. When economic tools get challenged, geopolitical leverage often steps forward. I don't think we're heading into a full scale war, but limited strikes, targeted action, or show of force moves are absolutely possible. Enough to move oil and shake the markets. But we're prepared though. Adding the Fed delaying rate cuts and keeping higher for longer alive. And you got a late cycle, headline driven environment where volatility rotates instead of trends cleanly. And look at metals. Gold and silver already dropped hard 2 weeks ago. That was not strength, that was distribution. If metals were the dominant safe haven play right now, they wouldn't have sold off like that. If metals were the dominant safe haven play right now, they wouldn't have sold off like that. Capital rotates, it doesn't disappear. Right now, it looks much more like energy, oil, and defensive stocks are the cleaner plays in the geopolitical tension setup. This isn't a hype market, it's a structure market. Trade policy uncertainty, geopolitical risk, and delayed rate cuts create controlled chaos. And in controlled chaos, discipline wins. So that's what I have on the Supreme Court ruling. And that's why I was saying metals isn't it. That was a huge warning shot when it sold off like that. That was distribution. That was the institutions telling you we're taking our money out of gold. So
What do you want? There's
no,
nothing to eat.
I don't want nothing. I'm just trying to talk. That was gold, silver, and other commodities telling you that institutions telling you that we don't feel safe with our money in these plays no more. We're going to put our money now in oil. And we see what Trump is doing. They already been prepared. That's why oil broke that 8-year resistance level, and that's why energy is coming back from the dead after 3 years. That's years. That's more than 700 days. That's like 900. We're past 1,000 days with these sectors. I don't want nothing, but with these sectors but now they're coming back from the dead. That tells you something. Again, metals isn't your savior anymore. I don't want nothing. I'm just trying to teach. That's it. But so yeah, y'all gotta just be careful, stay away from the metals, and just focus on energy and oil and your defensive stocks like your McDonald's. Just don't eat from there, but invest there though. That's all I had to say, bro.
Facts. And to add, look around some consumer and retail also.
Oh yeah,
Small
yup.
cap,
Thank you. Yup, yup. And
small cap. That's all in the rotation.
mm-hmm. And
And I like that line, like you said. It's like money doesn't leave the markets. It changes location. Is all it does.
mm-hmm.
It moves from
Industrials
one
too.
address to the next.
My fault. Like Alex said, yeah, industrials for sure.
Industrials too. Yes.
You if you
Yep.
look at all of them XLIs, XLVs, all of them, you're gonna see them start. They're gonna start
Yeah.
doing their thing. Healthcare, I haven't looked at, but healthcare, yeah, I haven't really looked at healthcare. But if you look at your industrials and stuff
Healthcare's
like that, look at
up
it.
this week.
Sorry, what was that?
Healthcare was up this week.
See, that's the sign right there. So, um,
Something I have on watch that's on our main watch
mhm.
But
is Deck.
what? What?
Decker's Outdoor.
I don't have any food for you, son. No food. It's all
You
I
could
need.
just come over and take them because I
I'm
got
gonna call
5 of them. I know what
ACS,
to do.
Nisi. You better feed them. I'm a
Oh, sorry.
mandated
I'm
reporter.
about to just come over there.
I didn't know I was on. Sorry.
Nah, he not
My
listening to you.
cat's bugging
Nah,
me.
it's okay. He not
I
listening
already
to you.
fed him. I fed him 3 times already, and he wants more.
So he need to sat down then. 3 is enough.
Right?
Sorry for getting worked up. All right, go ahead, Rams.
No, I was just gonna say I've been looking at Deckers.
Decker.
Deckers just, oh my God.
Go ahead, bro. Let's see your screen.
Let me yeah.
So, while y'all looking before y'all start speaking, I love y'all, right? But y'all keep saying, "Oh, this is running. This is good. That is great." So for me, who don't have y'all in my pocket and can't call y'all, how I use like the 10, 20, and the 50, those EMAs, and as long as everything is above that for, I guess for a swing, I would say like on the monthly and the weekly, if it's like that and it's good. But if I'm in like a day and I want to do like a quick swing, like say, so I did a play on SPY, and it was a 2-day ODTE, 2-day expiration or whatever. And when I got in the play, the delta was at like 79, and that was like, let's say 10:15. By 10:30, because it was moving slow, like the candles were small, they weren't making big moves, the delta was down to like 20 something and the theta was up to like 80 something. Like, how can you gauge that before you enter the play?
Me personally, I don't do zero DTEs because I don't that's not my trading style. So I've never really worked with zero DTEs, but if that's what you're gonna do, those are in and out plays. And 9:30 to about 10:15, you're gonna see premium in there. Anything beyond 11 o'clock to midday, you're gonna start losing steam on those zero DTEs.
Mhm.
So I would very much be careful playing those. If that's your style, I would go at least me and my style. If that's what I would do a minimum of 30 days at least. I don't invest that way. But with the zero DTEs, you have to be in front of the screen during the trade. Don't leave the screen. Watch candle by candle. Watch all the action. And if it's a zero DTE, have the whole map ready to go, and you only execute if and only if it plays out the way you want to see it play out. Because it's a zero DTE, you're running a lot of risk. You're not giving yourself at least 2 3 day grace for your analysis to actually play out. Because what can happen is you might be right in what you're looking at, but because you're not giving yourself a couple of hours of time to let your play actually play out, now you're gonna lose 10 out of 10 times playing zero DTEs like that. So I would very much be careful. But if that's what you're gonna do, sit in front of your screen or have the phone in front of your screen while you're watching the play thoroughly.
Yeah, that's not my style. I was just like, let me see if day trading could
Always
be a
give
thing for
yourself
me.
Stay away from
like
it.
a risk. Yeah, don't always give yourself that cushion because, like I said, there are many times we are right. You're gonna be right in what you're seeing. It's just the time to that price is what you're gonna be off on. So
And
when you do that kind of analysis, give yourself the extra cushion. That's grace on your behalf.
and that's what it
And
was. Like three
yeah,
plays, it reversed on me, but by the let's say by 2 o'clock or so, it definitely hit my target.
yeah. And at the same time, it does, now once the theta is running up with that kind of steam, the stock could run up. That premium you had won't no longer. It's literally an hour or two away from expiration. Nobody wants to buy that. So you have to be very, very fast with those. And like I just said, I wouldn't suggest playing your money under those circumstances. That's day trader philosophies. Those are day trader areas. That's their field. But you really have to be in front of the screen for that. But I don't advise it. I really don't. That's very risky. Give yourself some grace, and you can always. It's so much easier making 15 to 30% base hits with some time on the table. You could be profitable 7 out of 10 times. Now, yeah, you don't know the 3 times you're gonna lose. The market goes against you and against your analysis many times. But give yourself the grace because those zero DTEs, that's the way I see it is many traders, not everybody, because some people do knock them out the park, but that's their style and their strategies. Now, those zero DTEs, that's many people are just giving money away to the market freely because they're not understanding that time to price. Let your analysis play out. Give yourself some grace.
Well, that's it for me. I won't be doing that no more.
Hmm. Yeah, don't day trade. They want you. That's why they promote it so
They,
much.
yeah, yeah, they want
Like
that.
FanDuel, like Robinhood loves promoting it. Once they did, you could day trade at night. 24-hour markets. That tells you enough right there. It's casino. They them zero.
Mm.
That's just for money. You're not meant to win. The odds are stacked against you for sure. Even if you're going out at least 3 days. But I would try if you're doing SPY. I would try to do 2 weeks, at least a week, and that's still pushing it. You gotta really be sharp. If you want to do like shorter days, do IWM,
Oh,
but don't
okay.
do zero DT though.
All right,
Okay.
so
Thank
guys,
you.
look. No, you're good. You're very welcome. So I'm looking at Deckers right now.
Wait,
Um,
Rams, what? Not to
yes,
cut your knowledge, what's that? So I know you got the volume. They're both volume gauges.
they
The
are. They are. They are. It's just one is like an X-ray. So this is like just an X-ray into this. I'm so used to reading this that I use this one because I really do like it. Like the guy that did it, I really love the way he does script. So he's a really smart dude. So this guy here, he really like went into this in detail. So you see this high volume here, but it doesn't reach. Like yes, it's like getting to the average line, but it's really not as strong as it perceives here. Now when you see a yellow, that's when you see it catching actual steam because you see this one here, it hit yellow because we actually tapped the moving average of the volume. So it actually caught steam from there. And that's why we got the push down. So now when you see this red one, this is the ones I hunt for. So I hunt for these and now you could see those cleanly here because when you go like this, see, when you go like this, you could see them. You could see them. Look, that's ultra high right here. Now, remember, volume and candle needs to match, but now there was still this is still ultra high volume inside that candle. So what I like to do as one of my little tricks is I highlight that candle and I make it a range box. And that candle represents a lot of fuel and strength through there. So now you see, even here, since we're in the bottom of this whole range here, now you see I have this inverted head and shoulders here. We gapped up, right? We gapped up and we pushed up. Look at the candle. This is a daily candle, guys, right? So look at the candle. We closed over the level. And this is, look at the level I'm talking about. I mean, there's potential here. This is potential, high potential here. So, not like, I'm not saying I'm saying I'm watching it that I'm going to make the play tomorrow. I'm watching this for the break. I want a clean break into the zone here. The clean break, and that is gonna come. That is coming. Unless we lose my hammer candle right here. But right now, it is looking so prime. Look at this. So look where it rejects the last candle of today, right here. That's not by chance. And now for this, guys, I do use the wicks because I need all the power of that move. So I go wick to wick in my high, ultra high volume candle. So now it's either my move invalidates if we reject the level and break under. Now we have to wait to fill this gap, see how we're going to react. But right now, mind you, that we're going to hold that gap. Look where we fall. Look where my dotted line is in the bottom of the volume node and right by that gap in the beginning of the gap. That gap is going to act as support. If this is a true move, we are not going back to fill that gap. We're going to leave that gap behind for some other time. So now, today we rejected. It's okay, and we are still above the level. Now, whoa, we're right under the level. Now, I'll accept the rejection today because of the type of day that it was. Today, it was a hell of a day. So I'm watching this play as one of my close watches right now. So you see, look, in the volume profile here. So look, let me give it all so I can read it all. There we go. So look, right now, see where my dotted line is right by the level, the green level at 118.35. That is my last piece of high volume area. Once we clear this, once we can clear this can be, I'm not gonna, of course, not gonna put it side by side with TPL, but it's one of those type of setups. So this is what I'm watching right now as a close watch. Deckers. Ab, I would love for you to add it on the list. Just, it's not all the way prime yet. We need the break of the level, and we're going to need to hold the level. Even if we break over it and take a couple candles above, let's wait for a retest. Let's make sure we feel the move and we're ready to jump in right when the move is about to take off. Because what we don't want to do is jump in the move too soon, and now the premium starts cooking us little by little while we wait. Again, another situation where we might be wrong in the right in direction, but wrong on time. So just because it's getting prime now, I'm just watching for the move early. A day trader will wait for this break and take the break or take the next candle's retest. We wait for a nice run, a clean rundown back towards the level on low volume and take that valid retest on the reversal. That's what I like. I don't, unless my strategy and my trade intent for the day is I'm going to perform a day trade because that is the trade intent, then I might take the second or third candle as a retest on rejections. But that is not the retest that I look for when I am setting up for a swing. Remember, TPL took a while for me to cook. I waited for TPL for about 4 months. I am not saying this is going to take 4 months because we've been in this range now since March 7th of 2025. the year. We're approaching to the year. So this is perfect. We're right at the moment. And we have stack confluences. We have my high volume node, we're inside of it, getting right above the level. We have an inverted head and shoulders and a nice gap up that is going to serve us as a good floor. So chances we could come reach it, bang, and that floor can make us bounce right back off of the level if we reject at the moment inside the volume box. This is not a consolidation box. This is don't confuse the box that I made here for anything other than a high volume area on a bullish candle that closed above the level on the daily. So this is a high watch for me. Very high watch for me here. Look at the weekly. We're approaching this level. This is key. This is key. But this is all I got for Deckers. I don't want to go too crazy on it because we're patient. I don't want anybody to go crazy right now and Deckers, Deckers, Deckers. We're waiting on it. It's fine. This is setting up for us. This is gonna be a high probability trade once we get in it. You want to touch on anything, Ab?
Yeah.
Gotcha.
Yeah. So yeah, we could add Deckers. I was looking at it when I was talking to you. But like he said, it's definitely not ready. It's going to, in my opinion, like a month from now. I was looking at it on the monthly and the 3 month, and the monthly is telling me that we're coming to resistance. We're close to resistance at 130. The good thing is our shorter moving average is underneath it, is cupping it. And so we should start forming a base, and these moving averages still start rising up. But when we get up here, we're gonna start consolidating and we're gonna range for a little bit. And then the reason why I say a month, because when we go to the 3 month, why when I'm on a laptop, I could never pull up 3 month. Um like fuck. When you go to the 3 month though, I have my 10-day moving average that we're really below, but wait, why is it different? Let me see where's the days at. Minutes, hours, days. Matter of fact, it's probably this bar in my way. No, it's different from okay, okay. I see. All right, boom. We go to the 3 month. Our 10 days still right there. You see how we rejected it multiple times and flushed back under this huge candle? That's what I'm worried about. But it's starting to rise up finally. It's not as tight as it was before. So it's a good chance, again, like I said, we come to that 132, reject a little bit, and consolidate before breaking above that. But we could definitely add that. But again, like he said, this one out of all the other stocks will be the last one that'll probably make the move. It's not ready yet,
Yep.
but it's when it is ready, it's gonna be like a $90 move. And I'm not even over exaggerating, but literally like a $90 move from the entry. Um, I wanted to go over this right here. So I'm about to put y'all on right now because I know most people don't know what this is. This ticker, well, this ETF is called Bloomberg's, what's the index? Bloomberg Magnificent 7 Index. So what is that? Bloomberg Magnificent 7 Index is it tracks the performance of Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla. Your Mag 7s. Um, so think of it like these are the captains of the stock market. When they're winning, the whole team usually wins, and when they're losing, the market struggles. So, are the biggest tech companies strong or weak based off looking at the 3 months? You're finally breaking a structure to the downside. That is not good. Hold on, let me use my right hand. I ain't lefty. So we fell under. Well, we didn't close yet, but damn, why did I zoom in like that? We didn't close yet, but we're very close to closing under here. If you look at this chart, how do I zoom out of here? I did some bullshit. If you look at this chart, I zoomed in my screen too much by accident. All right, well, all right, if you look at this chart, this isn't bullish. This isn't bullish no more. You're falling underneath the structure now. We were supposed to hold that white line. We're not. We're getting a retest now. Remember, break and retest. You're retesting this. The 20 is declining down. You're going to reject your resistance, and then you're going to set up to go lower. Remember, this is the Mag 7 all together as a team. So what this chart is showing, you had a big run up right here. We ran up, then it got choppy at the top, and now it's breaking down. That tells you leaders are losing momentum, big money is rotating out, and the market is getting fragile. So when this Mag 7 weakens, that's ES and QQQ usually is going to follow. So this is basically what I was talking about today. So like the ES and SPY is the market. This BM7T is the leaders of the market. Yields, rates, the dollar, then oil is the inflation and growth. So if ES is weak and then you don't want to check all them other stocks, you'll come to BM7T and you see that weak and the yields unstable, that's risk off. This is an easier way than what I was telling you before. So I'll say it slower. So if ES futures, S&P 500 futures, ES, if that's weak, if ES is weak and BM7T is weak and yields is unstable, that's a risk off environment. And vice versa, if ES is strong and BM7T is strong and the yields are calm, they're stable, that's risk on, which means institutional flow. So that's basically all it is. This just it takes the Mag 7 all together and it weighs them together and it's giving us their price in total of how if they're performing well overall or poorly. So we can see they're starting to break down now. Um and this makes up about 90% of retail. So this ticker right here is one you want to get you want to put as your favorite. This is one you definitely want to start watching though. I'll just go over again. So if ES is weak, this BM7T is weak, and yields is unstable, that's risk off. No big money is in the market. If no big money is in the market, you don't want to be in the market. Or no big money is in the Mag 7, then you don't want to be in the Mag 7s. ES strong, BM7T is strong, and yields is stable, that's risk on. That's institutional flow. And that is all that I have. But I definitely wanted to show y'all that. And he reminded me when he showed the Deckers. Um,
All
that's
right.
all I have for that
I'll give my thoughts on that. Let me
one.
see.
Okay,
I'll be brief. I won't take too long.
don't matter. 255, we doing good. Because that was after this, we basically just questions, Q&A. Unless you got something else.
Let's see. Okay, let me see. Where am I on the weekly? Okay. Yeah, so for this, we don't get no volume. We don't get things like this, because this is all in conjunction. Like, this is all together, so, but that's fine. So, let's say, where are my emails? On the week. Yeah, look, on the weekly, we already rejected the 20. We already rejected the 9. We're testing this level. And right now, we closed right at that 32,480 area. And we're rejecting. So now, what I see here is we're going to have a nice little breakdown and come check right here, 30,349. So we're leaving supply. We're leaving supply. Look at them right here. And we're gone. We're gone. So this was last year, right? This was last year, that tariff stuff. So this is when the drop began. So from here to here, that was a 30% drop. Just say we get about 20%, right? Right here, right here, right to the structure area, right here. That's when you can say the Mag 7 is gonna start getting primed for its move. CapEx spending might be over. Look where my long-term average is lining up at. It's right there. It's right there. Look at that daily. That daily looking like it wants to come. It's rejecting on the 200. It bounced right off the 200. That dark pink that I got right here, that's my 200 day. So now we see all the confluences. Okay, you bounce from here, you reclaim your level. Now you're rejecting this level, but we are in a bearish downside structure pattern. So chances are in this rotation, just because we're in supply, it's right here. The Mag 7 cannot keep going up forever, every single year. That's it. The run's been massive. The V-shaped recovery was amazing. We come here, thin retest. We just come here, we consolidate for a second, and we take off. We've been in this supply cooking for how long now? Now we making you think higher high, we hold the low, higher low, higher low. Now we break structure. Now we break structure. So now you can't really touch growth and momentum stocks right now. You're gonna get cooked. You're gonna be chasing these pops. Every pop has been. It's like Ab said. The you sell the rip. So every rip, bang, sell, rip, sell, rip, sell, rip. What comes next? And we're possibly gonna do that. We're possibly gonna do that. Boom, consolidation phase. Stan Weinstein, stage 1. Okay, let's let it cook. Let's let it cook, and let's see where we go from there. But right now, this is developing structure.
That validates my 20% pullback of the market. So that helps.
Yeah, that's why I wanted to give my take on it, because that was good.
Mm.
I was like, oh man, I see that was good. That was good. But that's all I got on this.
That was good too.
So
You just did.
yeah,
Levine has a question for you. I'm gonna let her
yeah.
talk to you because I didn't I see her put in the chat, but I don't really understand it. She asked, when we are planning our plays, can we extend the box we used for the week based on the length of the play? R.A.M.S 1 STD DEV.
You can, but what you want to do, those standard deviation moves work better when they're compressed. That's why I like to see it in the weekly and take my time and see it build structure by structure. And we go from level to level, target to target, because when you do, you can totally, most certainly get the 3 week, a 4 week, a 2 month deviation move and add it to a box. But what happens is now you just create, it's noise, because what you're going to create is such a big range of whatever the deviation move might be. In 6 months, the stock can very well say plus $82. But now you got to remember that every week Options come in, options come out. There's money being added to and taken out. So those deviation moves get adjusted. So if you want to get a longer time span on your box, you have to readjust. Just take a look at it every week and see what the number adjusted to. It could be a couple cents or it could be a whole dollar in cents. So just watch for that. So you can do it, but you have to manage it through the play. Every week, okay, go check that same date that you did the move for. Did that number change? If the number hasn't changed and your 0.16 deltas haven't changed, then you're gold. But if they did change, you have to pivot with the change because that's how you know that your play is actually moving in different ways that you weren't expecting. So you can definitely do it, but just keep tabs on that. Did that answer your question?
Okay,
Yes,
glad
sir, but I
to.
have another one. So you like the 16 delta when we go to find the
Your
expected move.
extended edges.
Yeah. But
Yep.
so what we're just using it to find those numbers. It has nothing to do with the contract that we're gonna use, right?
No, but you just need those 0.16 deltas because those are what the traders and in the trader world they call the lotto tickets. So those are the ones that have no delta on 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 the premiums. But
Mhm.
if those strikes hit, you're gonna the risk and reward to those strikes. You're not gonna pay much for those premiums, but you're gonna make a lot of money because of the risk that you took. It was so far out. Those 0.16 deltas. So that's what they serve as let me see if I can find an example. Who was it that did it? I saw it earlier. I think it was this. So this is what the extended edge will serve you like. Look at that. That's a Home Depot daily move. So you got the week here. So look what it did. It rejected right off that 0.16. Now you got the cases where it can hit this area and bounce. It can hit the very top, which would just be the bottom of your actual range. Because from this to this is my extended edge. That's the 0.16 delta. This, because this right here is just flush with the bottom of my range at 379.10. But there's an extended edge that can come down right to this 375.99 level. And that's with pairing confluence, it pairs off right in your level of 378.31 area, and you have the 200 day, and you have the rejection on the candle. Now, yes, the candle sold off more, but you see where it held. So that's where your extended edges come into play because sometimes you might get a case where you see there it goes. That's the last week on Home Depot. Look where it rejected on the top of the range, which is this, where the white line is. But this is the extended edge of the 0.16 delta that brings me to 398.08. But the wick, it just collected right here, right? And then rejected. Boom. So then that's why these say, just say you wanted shorter dated contracts or faster moving contracts because your style is this is one of those where you can play the levels, break, retest, hold, volume is confirming, and you take it to the top of the range, and you can't be greedy in these cases. You have to understand the assignment here. Or you play the fade the edges. In this case, you can't fade the edge because through the whole week, it just rolls nice and steady to the target. And then it came back to the weekly opening range, right? Same thing here. You couldn't fade the edges because you can't fade the edge at the end of the week. You got no time. So if it does this, then this was a possible fade the edge here right off the rip, or you gotta wait. Is the first candle. So you could start working the time frame down. Okay, what happened? So you see it rejected from here. So now this would have just took you out if you would have played the edge, but you leave right away, right off that level. So you fade the edge if it's too early, or you play the weekly extended move to the top of the level, to the bottom of the level.
Okay.
But you always want to add your 0.16s. Look, notice how here this in the bottom is 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 a bigger edge than the one on top. You see the brown one right up here?
Yeah.
So that one's smaller. So that just means that the top of the range, that
It's
0.16
small.
delta number, it was just closer to that 396.84. And then 373, which was my bottom of the range, when I looked up that 0.16 delta on the board, it just landed further away from 373. So it gives me a broader range.
Okay.
So you see, with a broader range, chances are you could dip in there. But when it was tinier, there was not much to grab in there, so it was just it was a hit and run.
Okay.
But those are things you'll start noticing. Like let's say if you're watching those and you see it start happening, you're like, oh wow, it snatched right from there. Because you see, like, look where it came here. So if this whole structure, this is beautiful because what it did was it just collected all this liquidity right here, which that's beautiful. Look, even this guy's right here. Oops, right here. All of this. That was good.
Thank you.
No, not what I said was good, but I mean like the move, Like it collected liquidity so you can see the bounce. You can see it. Like, all right, we're gauging, we're fueling again for another move here. If we reject now, that's nothing wrong with it anyway. If your play invalidates, once it starts rejecting, and let's say Home Depot were to start breaking down now, out of nowhere, it just starts breaking down, and we say, well, okay, once it breaks my certain level of interest, where I'm already in a runner play, so I already have a certain amount of profit. I have it take me, stop me out at this certain amount of profit if we go down there, right? But I gauge that because there's liquidity right here. This is an obvious stop, but I've already been in the play. They can come grab this at any moment right here. This is prime. Why not? On the daily, why not? The 50s right here is rising. So it could just come and meet up with the 50 real quick and whip everybody off right here and go. So as long as you understand the probabilities in the play, you can see any move coming and react to it right away. That's why what Ab said the other day was so, so important. You cannot do this when you're in 10 plays at a time.
No,
It's not
sir.
that it's impossible, but you're putting so much workload on your back. And you have to check for all these details. And you cannot get this detailed on your plays if you're running 10, 15 plays at one shot.
Yeah, I just want
It
really good
becomes tough.
plays.
Yeah. And also, look, if you don't feel comfortable, right, going on a certain direction just because oh, it's a bear market. Okay, let the bear market happen because, like Kramer says, there's always a bull market somewhere. And
Mm.
that can't be any more farther from the truth because, okay, if this starts just shifting structure right here and we start losing everything I work for right now and everything I've been looking at, and it just starts losing it. Okay, well, and I don't feel comfortable playing puts, then I just look at the next stock that might be having a bullish pattern, that might be setting up for a bullish run. Because let's say I like doing calls, right? So don't force a side or direction on yourself because you see other people do it. Feel comfortable going one way first, right? Don't trade every move. Don't over leverage. So just all you really need to do, you see like the deckers, right? We're watching it early. But all you need to do is trade the right move, not every move. We don't need to
Right.
trade that breakout on Deckers, but we're going to watch it. We're going to see it That's why I called the channel the snipers, because we want to be so tactical at everybody loses, guys. We all lose. Ab takes losses, I take losses. We are all students of the game. And now, if you don't feel comfortable going in a certain direction, don't take it, because you're forcing a loss because you're not comfortable here. Do what makes you comfortable and only trade your plan. That's all it is. So now I'm watching it. I'm watching it. As long as we stay within the levels that make me comfortable, I'm in the play. The moment it does something that makes me uncomfortable and it validates my thesis, I'm gone. We don't hold this 50, we just break down, I'm gone. So there are rules in place and I follow them. If I see it happen into one direction, okay, well, this is how I gotta execute now. If I see it going this way, okay, well, this was the plan for that probability. But because I was only looking at Home Depot, TPL, Dollar Tree, and I'm only all the time, it's just like in the gym. If you go to the gym every day and you work out every muscle, your physique will change. You will see something, but you're not going to get the output that you really want. You work on one muscle group a day, and all the energy that even if you putting on two muscle groups a day, if you do that in one day on one muscle group, now you really tear your chest. You really tear your back because you're not jumping from one muscle group to the next. It's the same thing. Stick to the strategy and stick to the plan. Not every setup is going to be your strategy. So you got to leave it.
Mm-hmm.
Feel comfortable. Keep watching it. The more you watch price action, I guarantee you guys, it becomes easier and easier. I keep my three screens on. I keep ES, I keep GC, and I keep NQ on all night long, every day. I'm not watching it all night, but I glance at it. I'm watching what it's doing at all times. So I can feel comfortable getting in a play. And okay, it invalidates my thesis. I have to get out. It stops me out. That's okay. That's part of the game. But I could understand what the chart is trying to tell me. When it's time to get back in, no biggie. You jump back in. You wait for the setup. I'm sorry for going off. That was all I got.
Bet. I got 15 minutes, so if y'all have any questions, just ask them now. If y'all don't,
Nobody else has questions?
I got a quick question.
if y'all have a question, Levine gonna hit y'all with a question, right?
I just got a quick question for R.A.M.S. Point 16. I know you spoke on that on I think a couple lives ago. Ab, is that uploaded on your YouTube that I could look for it in there?
Yeah, that's one of the videos.
All right, I'll go look for it. I just want
It
to know
was
if
the
it was
last
uploaded.
live.
I forgot.
Yeah, I
Yes.
think so.
Yes. Because we marked up the chart for Dollar Tree. No, for Lowe's. We marked
Yeah,
up the
when,
chart
when
for.
he
Ab,
was
you don't
going
know
over
that's on the video.
the
Yeah,
point
so
16 breakdown and all that on Thinkorswim, I believe it was the platform.
yeah, it
Yeah,
wasn't
Yeah,
the live.
that's the video.
that's the
Okay. So
video.
I'll
Hmm.
go look for it.
All
Thank
right.
you.
Yes, sir.
So that will be this one, the market plan.
Yes.
All right, cool. Thank you.
Yeah.
Okay.
I'll tell you, I love you, brothers. Y'all hit me with a whole lot of knowledge. Y'all just gave me like 77 questions that I got to put in order.
I love that
I'm
you
really
But
glad you
it's
enjoyed
just
it.
giving me a cleaner breakdown. It's helping me to see it more. I think my personal issue though is watching the market alone is boring, and then I feel like I talk myself out of it. So I'm trying to figure out the psychology of needing additional agreement or confluence.
Mm. That's normal though. You're a swing
Mhm.
trader. That tells you right there that you're not a day trader. You don't like staring at it, and it could be boring. It can. I just go in and out of looking at it and stuff. Just try to stay busy. But that's good that you think like that because if you keep staring at it, it's gonna force you. Your mind's gonna force you to hop into a play you know you got no business being in. So that's good that
That was
you don't
good.
like staring at the chart like that. Because most people are actually the opposite of you, where they're addicted. They want to sit in front of the computer and watch it, especially when they first starting. They'll sit in front of the computer and watch it all day, and that is
Mm-mm. I
so
want to
unhealthy.
settle. I want to get up in the morning, mark up my charts, see what hits after the first 15 minutes,
Mhm.
and be off the charts by 11:30. That is my goal. And then if I be like, oh, I like XLE or I like QQQ or something for option,
Mhm.
then I'll do that later on in the day when it all calms down a little bit. I see where the price levels out, and I usually like to make my entries for those at the end of the day.
Got you.
Now, what time frames and what expiration dates do you look at when you're say developing the play through? What time frames are you looking at, and then what expiration
21
dates are you
days and
pairing with?
above. 21
I'm
days and
sorry.
above. Uh-huh. And
Okay.
the daily and the weekly, but execution is on the
Yeah.
hour.
That's perfect because you don't like to look at the market like that. So you looking at the weekly, that gives you good range prices. So now when you go on ramsoffthecharts.com, you should be looking at the weekly levels.
Okay.
And then you put those levels on your chart and you go down to the daily and you see when those daily levels hit, and then you go and execute your entry to refine your entry on the 1 hour. And then
Okay.
you let it cook because you're a swing trader. And
So
then you
I'm
browse at
hoping.
it. So,
Uh-huh.
but that's the strategy. See, when you find your trader identity, when you see the type of trader that you are, and you start realizing it, you have to shift and build your strategy around it.
Mm-hmm.
So that way, when you do look at the charts, you're at peace, and you can see clearly because you know what type of trade you're looking for coming into the chart, not looking at the chart and saying, "Well, what do I do here?" So you already knowing, all right, well, I already have my weekly levels. This is my watch list. Let me go through my watch list. Let me see what's range bound, what's retesting, what's reclaiming, what's rejecting, what got potential to break out. And that's all you do. That's what you do your whole first hour. If nothing's going on, close up shop. You leave it alone for your alerts.
Oh,
Weekly
yep.
levels, they can take a couple days to hit. So you develop your patience. That's your strategy. Nothing wrong with it.
So you just gave me my three more questions. Nobody still got no questions while Ab still got a few more minutes? Because I got. So based on what we just looked at, I did on XLE, right? So I'm just gonna try to read my jibber jabber here. So I went and I did the at that time it was a plus or minus 3.719 move. The price was 30.03 at that time, I think it was. And then I looked at the 16 delta from that. And then I went to R.A.M.S on the chart and I got the three resistance and the three supports. And then I took that to the options chain, the strikes. That's what those three numbers for each are, right? So I took those to there and then my preferred delta. We each have whatever we like to use. So when you go to your delta, that's what I'm supposed to do, right? And then
Now
I'm
hold
supposed
on. I
to,
have one quick question. I don't mean to cut you off. You said when you put the levels in, you're 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 using that to find your strikes.
yes.
Okay, yeah, that's good. Now the thing is, what you want to adjust there is your strike. You want
Hmm.
it to be either at resistance 3 or at support 3, if and only if they land inside that box.
Okay. Strike.
Now, you do it to the level that lands around the price that lands near the bottom of the range. Because remember, some levels will tip under that. So
Yes.
you don't shoot to go above the one standard deviation. You shoot to stay in within that range.
Yes.
So
So the
you can
ones
do
that's
that.
within, I'm sorry.
No, go ahead, go ahead.
So the ones that are within the one standard deviations are the ones that we should be using for our strikes. The ones that end up anywhere in those extended move ranges is what we could see as possible or probable
You
additional
got it.
targets to
There you
either side
go.
of the price or
There
low.
you go.
Uh, so at the like some I noticed that you said sometimes it may not be exactly a 16 delta. So like a couple of them are either 16 or 13, 17 or 20. Do you
Hmm.
suggest adding and dividing and picking it in the middle, or just saying, okay, well, I know that my this whole range is around $55. Let me just pick the
There you
middle
go.
price.
Estimate. So now if you see that it skips from point 17 and then the next one, let's say if you're looking at the put side of the table, you go put point 17 and then point 13. So you're
Mhm.
like, damn, all right, what are the numbers that are there? So you just estimate, well, the point 17 is closer to point 16 than the 13. So let me go 25 cents less, 50 cents less,
Okay.
according to the range in between the two strike numbers.
Okay.
So don't go too far, but always estimate as close as you can to the delta that as close as you can find. So like you said, it's always going to be like a point 15 between a point 19 or a 17 to a 13. Or if not, you're finally going to find the point 16.
Mhm.
But estimate it. There's nothing wrong with a quick little sense estimation. You're going to hit it right on the money.
Do you have a preference in the spread? So I was looking at trades with like a 15-cent spread or less in like a 80 delta area.
What do you mean between the point 17 and 13 example?
No, no, no. So like we did all of that and we're like, okay, so let's say I don't know, let's say the 16 is $57 and price is at 54 and change, right? But the 16
Hmm.
is at $57. And at that strike, you get a bid ask of 15 cents with your other things that line up, like your extrinsic value, your volume, whatever you look for.
Hmm.
Um, let's say the so it was at 16 cents. And let's say the one that's a strike above it, let's say their bid ask was better, like maybe 10 cents or 7
Hmm.
cents. Would that make a difference for you?
It would make a difference only if is a like if in the open interest and the volume it's very different. But if you're right next to that contract, chances are people are going to start pouring in to that next one over too as price moves closer to you into
Okay.
at the money there. So now I wouldn't just always aim for a point 16 because that's really like far out the money. So if you do get a reversal and a fake out, then you're really gonna go nowhere. So I
Concern for
wouldn't choose. Yeah, I would stay as close as I can, so that way you hit your target, and you could like, all right, I hit the target, it went to the next level, I cash out at that target. You get me? So now you make more on your premium than actually aiming for the point 16 because you're not always going to wick at a point 16. You might reject just at that bottom or top of the range.
okay.
And if you get one of those nasty moves that at the very beginning of the week, it decides to run to one of those either edges, you have to be quick enough to fade the move or fade the downside to the upside. You have to be very quick. So you always want to go like now, if you're gonna fade the move, remember you aim for the weekly opening range to the middle of the range. Don't aim from corner to corner. That's too risky.
Right, that line that
Yes,
midline that we got in there. Yeah.
yes. So if you're playing the levels, always stay nimble with those. Don't overstay in those because that could just come and wick and you think it's gonna go to that point 16. So the way I like to think about the point 16 is like you said before, it's a probability, but it doesn't mean every week is gonna wick or get the whole candle closure inside of one of those ranges. It can
Mm,
happen, but don't aim for it. Just aim for that range, that top of the range. Now, when you do get a wick in there, you get that extra profit in you. That's always the plus. But don't shoot for
okay.
that because if you get used to shooting for that, then you're only gonna shoot for that. And a lot of times when it does reject, you won't cash out in time.
Yeah.
Mm, okay.
Let me add to that. I got 5 minutes. The
Okay.
with the 16 deltas, you gotta be sharp though. Like if you're new, I wouldn't suggest the 16 deltas. Not talking to you, Levine. For whoever's going to start watching it, I would stay more like if you're a swing trader, 0.40 to 0.50 or like the higher ones because with the 16 deltas is the or any low delta like 0.10 to 0.20 the theater kicks in it dies fast you need like perfect timing but the higher the delta it moves with the stocks and it survives the pullbacks and it lets the thesis play out like you got to have a perfect entry with these lower deltas you're not going to be able to survive that many pullbacks they're cheap but low probability, and a high decay, and you
Mm,
need big moves fast. So like your entries have to be sharp, and that's why Rams when he gets in, he's getting. That's why it works with his setup because he mastered the volume, so he's getting in with momentum, and
mm,
he's getting out when momentum fades. So you have to like really be sharp with your volume gauges, like lock in with RAMs if you don't know much about it. But if you're gonna mess with them lower deltas, I really suggest that you really study volume and the momentum trades. And that's all I wanted to touch up on delta. Only thing else I want to say is also if you knew that the site is fire, you don't if you don't know how to do support and resistance, tap into my zooms. Um, if you can't make the zooms, his website it gives the support resistance for you. You come over here, the bull trigger, and you'll see he got some your first where you could take your first profit. Like R1 would be the next target. It already hit R1 already. Then if it loses support one, then S2 becomes the next downside magnet. Yeah, resistance support here. It breaks down all the information you need on here. So if you're newer this is really good for you even if you're not new and then if y'all was asking like how do we know like if you don't want to depend on us you got the heat map here you get to see where money is going and where money is going out of so this right here is like it's everything in one you don't have to use two different websites for now I don't know if you ever plan but you don't even have to pay a subscription like how you do with a lot of them other ones so support
that's because he loves us. But I'm
yeah,
gonna support you, Ren.
support. Stop
I'm gonna be back in New
forget them
York
other
City next
ones that you gotta pay
Appreciate
for. Like
that.
come to the this is free. This is free money. And it's a lot of information. So definitely lock
Yeah,
in. He spent a
I
lot of
use it a
time on
lot.
here. And he spent a lot of money on this too. This shit ain't cheap.
month.
So I know he would
Oh,
definitely appreciate it if y'all could.
I do got a question pertaining to the site RAMs. When you go to the time frames, do you click the time
Yeah.
frame up there where his arrow's currently at, or do you click the time frame right above the chart right there, kind of at the bottom?
Yeah, this is right here at the top. This is your tool. So right here, whatever you do here, it's gonna
Hmm.
show on the chart. So then let's say like if I were to go to the Confluence board, I also so people didn't have to keep going all the way to the top and stuff. I added the same thing here. So I could just check the confluences here real quick. I could run through them, see everything's just setting up here, nothing's really going on, nothing's really
Okay.
going on like this, and then I could just come right up to the hub and it brings me right to the chart if I wanted to come to the chart and see. So If I'm in the daily here, let's say, right, and I was looking at the daily, let's say I'm here, so now I'll be like, all right, so these levels on the daily itself, they look compressed. So I'll be like, all right, let me see what we're looking at right here. All right, we're right at the pivot zone. So we're gaining steam to come up, right, towards resistance one. But what is the volume doing right here? See, volume is slowly creeping down. And we gain steam on the drop, and on the drop, we get the rising. But right here, we're really not getting much steam coming to break this level. So I am not fully confident that we can break 693.42. We might reject and see if we could actually reclaim on the 20, because this is the 20, the 50, and I threw the 200 as well, is down there. So now, if it could compress us above the level, maybe. But the volume right now is telling me as we get here, we might not break. It might reject unless we get a massive volume spike on our next opening candle right above. But if it's the opening candle, now you got to watch for that rejection wick.
All right, got you. Thank you.
Yes, sir. And also, let me just touch up on this real quick, Ab. I know your time is cutting short. But look, guys, even go on the screener sometimes. Look at the relative volume. Put it on one just to look at the moves of the day. I'll go like on $500 million bare minimum, and I'll just look at the SPY. Let's say, because right here is the universe. You could pick on everything right here, right? And let's say, okay, so look, these are all. This is bullish. These bullish moves right here that you see. So let me compress it. Bull trends only. Hold on. So you get the idea. So you
Mhm.
see this pop right here, this 0.93 pop on NVIDIA, it only had a relative volume right here in red of 0.86. I put as a minimum volume of 1.0, one time more the relative volume of the last 20 days. And today that move can easily get faded because it doesn't have the actual leg. Look, nothing here except down here. Now I could say if I was just looking for momentum, that's where I'll change it here in rank mode, either momentum or money rank. Money rank is gonna put this first. Who spent the most money and volume today? But if I go momentum rank, I'm gonna see who is up on the day above relative volume on the last 20 days. So this is golden. This right here, you can find a lot of, you can see a move. And let's say if the volume is not making sense on the chart, come here. See if the move made it to the screener, right? And then see if that relative volume matches what you're seeing on the chart that is weak, that it might be shallow, or oh wow, I put for one time relative volume and I'm getting a 1.95. I'm getting a 2. I'm getting a 2.5. Oh, that's wild. Now let's see some. Let's go look at.
Oh shit, I gotta go.
All right,
Get up out of here. Um, I'm gonna put it on thing if you still going. Everybody
no,
have
go
a
ahead.
blessed.
That's cool. But yeah,
Just
play around with the site, guys. There's a lot of information there, very valuable. It'll help your analysis, definitely.
Alex, the site is ramsoffthecharts.com, I believe. Oh, there you go. Somebody just pinned it.
Yep.
Yeah. I
word.
appreciate you guys. Thank you for your guys' time, man.
Thank you.
Word. Thank
Yes, sir.
thank y'all for showing up. We appreciate it. So we're not talking to ourselves. But I had put the delta like breakdown in here on how I look at it. Um so yeah, it's a full breakdown of it. But thank you everybody for joining. Um and yeah, I hope y'all have an incredible day. Stay focused, stay blessed. Smile, make others smile, and the highest achievement that you could possibly reach is to inspire others. So make sure you're serving others, and that's how you are walking and practicing and actually doing God's will. Most just
Amen.
praise him, but we don't want to just praise him. You want to praise him, serve him, and actually do what he wants you to do. Um, Other than that, though, I really pray y'all have an amazing day and just stay happy. And depression, being stressed, anxiety is all a mental thing. Just remember that. It's
Can
all
I
in the
say
mind.
something, LT?
Of course.
Hey man, you and Rams been helping me a lot because I've been in that scrambled mental phase
Hmm.
since I lost that money on gold and SLV a couple weeks back. So I've been kind of in that mental space where trades are getting away from me. I see the setups and but kind of like I'm scared, and then again it's like see that FOMO, seeing all the day traders making money, and because I need to make an income here. I got this little one right here, you know what I'm saying?
Yeah,
Like,
flash.
you know what I
Word.
mean?
You the
So I
baby.
appreciate you guys like helping me through this.
Where it's all
I
love,
know
brother.
just a couple wins, I'll get back on it. I know just a couple wins will get my confidence back.
Yep, I
Facts.
was just gonna say the same thing, Alex. You're rebuilding your confidence right now. You got a little war scars right now. It's all good. We all go through it, bro. You're gonna be
Yeah.
right back. We're gonna help you.
You guys are helping me, man. I appreciate you, Rams.
Yes, sir. Likewise,
Thank you,
Al.
brother.
Bless that baby,
Peace and
bro.
blessings.
All
Stay safe,
praise is due to
everybody.
Allah. All praise is due to God. Y'all have a blessed one.
All
Amen.
praises to
You
God.
too, guys.
All
Bye,
right, catch you
Nisi.
on the
Blessings.
next one.